All right, I think we are live on the Facebook. It's exciting. So I want to give you a July 2019 market update for Greater Charlotte. And I want to talk about the tale of two markets. So we have been in a run here just in general with our economy, with real estate, and just good times. And when it comes to real estate, though, it's not the same in every sort of segment of our market. And by the way, I didn't even introduce myself. So I'm Lars Hedenborg, co-founder of High Performance Real Estate Advisors, and we serve the Carolinas, both North and South Carolina. And once a month, maybe once every other month, I'd like to get on here and just kind of give you a slice of the market in terms of what's going on, in my opinion, about what we're seeing and how that might impact you and your plans to either buy a home or sell a home. So let me share my screen here, and I want to show you something that I'm going to start out general. So I'm going to start out with some data that we're seeing around the country, and then I want to go into very specifically what we're seeing in our market in terms of segments of our market potentially being a buyer's market versus segments of our market being a seller's market. I think sellers like to think that no matter what they're selling, it is a seller's market, and buyers hope that it's a buyer's market. And so this might shed some light on your specific situation, especially if you're looking to potentially trade from one market to the other. So to go from a seller's market into a buyer's market, if you're looking to get out of the current home you're in and looking to get into a premium or luxury home. So a trend that has been emerging for some time now is the contrast between inventory and demand in the premium and luxury markets. And in our market, it's probably somewhere in the 600 to a million plus is that premium, and going into luxury market is a million plus. And starter and trade up is 600 or less. You know, starter home is probably up to 300, then 3 to 6 is trade up. And so there's this shift here between these two markets and what it's doing to prices. So the buyer's market, the segment that's a buyer's market, are your higher price points, what we call premium and luxury. A buyer's market indicates that buyers have greater control over the price point, demonstrated by a substantial number of homes on the market and fewer sales, suggesting demand for residential properties is slow for that market or that price point. So we like to sort of generalize and just say it's a seller's market, and it's not actually panning out that way. And I'll show you the actual data here for our market, our specific market, here in a second. And what we're seeing, though, is that a seller's market is in the starter or trade up price points. And so the definition of a seller's market, it gives sellers greater control over the price point. Typically, this means there are few homes on the market and a generous demand, causing competition between buyers who ultimately drive sales prices higher. And we have aggressively priced $250,000 homes, and we'll still, get way more than the seller expected. We'll get 12 to 15 offers. And so that's an example of the starter and trade up price points being really tight and really a strong seller's market. And so nationwide, what we're seeing is, let me pull this out of the way here. So inventory for sale, in terms of the premium and luxury, we're seeing inventory go up dramatically. So up 19.8%. from about a year and 3 months ago. And then in the seller's market, the starter and trade up segments, we're seeing only a 2.4% increase. So there's more inventory sitting on the market at the higher price points. And average days on market is 47 versus 36. And then we're seeing price appreciation has increased in both segments when you look at it from February 2019 versus from March 2018. And so let me jump over to, let me stop the screen share here. And I want to, hopefully I tend to get a little data rich here, but I want to, let me stop the share here. Let me pull up one more thing that I want to share with you. And this is more specific. So what we just went through is just kind of a big picture view and what we're seeing nationwide. And what I'm going to share with you now, if I can figure out how to do it, is, so here we're looking at, this is the Carolina MLS. So this is a very broad, albeit more specific slice of the real estate market than the national data. So this is Greater Charlotte, Carolina MLS. And what I've done here is I've sliced the price ranges into 400 or less, 400 to 750, 750 to a million, and a million plus. I could do anything over here that I wanted to. And the data that we're looking at is the last 3 years of month supply of inventory. So this is saying that at a certain price point, let me say all price ranges here. I'll click on all price ranges. Right now it's saying in June 2019, there was 3.4 months across the board in our entire MLS of inventory for sale. So that means if no other property were to hit the market, it would take 3.5 months, 3.4 months for all of the inventory to sell off. What's interesting, so keep that in mind, 3.4. If we click on 399,999 or less, so that's like starter, a home, it's 2.6 months. If we look at 400 to 750, it's 5.3 months. And so the inventory, the month supply of homes for sale is increasing. 750 to a million, it's 9.6 months. And a million plus, it's 13.5 months of inventory. So it doesn't mean you can't sell, a property. You just have to be more competitive if you're selling a higher price property. If you're selling a high price property and you're trading down, you're moving from a strong buyer's market where homes are sitting longer on the market, and you're moving into a strong seller's market. And so it's depending on which way you're going. And this is just here in our local market. So it's just an interesting analysis. Let's see if we can find anything else that sort of pops out here as interesting. Let's see, homes. Yeah, so let's see homes for sale here. Million plus. Let's see if in the last 3 years, the number of homes. So you can see from October 2008 in our market, a million plus homes, there was 1,000. Well, didn't really uptick all that much, but it hasn't really gone down that much either. Let's see in the 400. So 400, this has gone down pretty dramatically. So there's just less inventory. We can slice it by days on market. So you can see the days on market for 400,000. I would expect this to be very low. And you can see 17 days on market for in June. And I would expect a million plus. You could see 49 days on market. So still, inventory is moving, although you would expect with over a year's worth of inventory, close to a year's worth of inventory to million plus and 49 days on market, that's not a lot of buyers moving through that price point. And so really, if this confuses you just a little bit, that's only because it's a little bit confusing. The point here being is that it really depends on your specific situation. When you look at, the different segments of our market, there's starter, there's trade up, there's premium and luxury. And right now, starter and trade up, it's a vastly different market than premium and luxury. Starter and trade up is a hot seller's market, and you can really get aggressive in your pricing. Those buyers, there's just not a lot of options for those buyers in our market. And if you look at the premium and luxury, that is a buyer's market because there's more choice. Properties are sitting on the market for longer, and not all those properties are selling. So all that to say, if your specific situation involves trading up or trading down or moving from one segment to another or coming into our market and moving out of our market, the only thing we ask is to sit down and sort of help you process all of what's going on for your specific situation, your wants, your needs, what's your desired outcome. This is not our first, rodeo in terms of helping sellers get situated and get an outcome, and then help them, position a seller into their next home, whether it be a trade up or a trade down. Trade up in this market, especially if you're moving from a trade up into a premium or luxury, there's a really awesome opportunity there to capitalize on a strong seller's market and to move into a strong buyer's market. So if any of this rings true for your specific situation, just go to highperformancerealestate.com. The only thing we have to offer you is a free home equity evaluation. That's where we really get specific on what your home is worth in your specific area of the city or outside of the city, in your specific neighborhood, for specifically what your home has to offer a potential buyer and what the value of your property would look like within a real narrow range. So it's our free home equity evaluation. It's 3 easy steps. You need to fill out a form on the site, highperformancerealestate.com. Again, Lars Hedenborg, co-founder of High Performance Real Estate. And we'll see you guys at the closing table. Bye.